Holy smokes, are sellers in trouble if this trend continues? Look at the amount of inventory that we have year over year that continues growing. That gap continues separating itself. And if this trend continues, it is really going to be bad news for sellers. Right here, if we take a look at Friday, May 1st, we had 50% more inventory right there where I'm highlighting it. 50% more inventory than a year ago. 11,890 compared to 7,923. And if we go to Saturday, that's when inventory peaked, and we upload that, we see we crossed 12,000 units. Now I'm going to share some more data and show you where this market, this shifting market that's shifting into a buyer's favor, is headed unless something changes. Comment if you think we're going to see a strong seller's market or a strong buyer's market in the second half of 2025. And if this has possibilities of resembling, which I've been comparing it to, the second half of 2022, where we saw 15% drops on the median price on the average home in the Wasatch Front. Now we're going to analyze a lot what's going on in the economy and in our local Utah housing market. Again, right here, we crossed 12,000 units. Now, the reason this is important is if we actually go over here and we take a look at this active listings, look where we're at 2025. Now, in 2022, you see this increase compared to 2021. And in that second half, that's where we saw prices drop upwards of 15%. And look at the inventory just continuing to increase over years past in 2025. I mean, we're essentially heading towards 13,000. We have more inventory right now at the beginning of May than we did in any year in years past when the market peaks right here in October and September, which means we still have May, June, July, August, and September with months of inventory growth left where we're having a net gain. That is something to really keep an eye out on, because if we are going to see inventory continuing to increase, are we going to cross 14,000 units, 15,000 units? If this does continue, the recession talks continue, the economy is continuing to get hit from different angles, this could potentially put us into a recession. And if it doesn't, just the talks about it, the fears about it with this inventory. And the Fed is stuck between a rock and a hard place with these tariff issues that could cause inflation. And at the same time, they should really be cutting the Fed rate, and these interest rates should be dropping down because the economy cannot function with these interest rates where they're at. Now, if we come over here and we take a look at this, US economy shrank 0.3% in the first quarter as Trump policy uncertainty weighed on business. We had an influx of companies buying products because they're anticipating them to go up based on tariffs. And right here, the article goes over that gross domestic product fell on an annualized pace, largely pushed by a surge in imports ahead of President Donald Trump's tariffs. Now, imports soared 41%, driven by 50% increase in goods. This could also be potentially leading to more jobs than what we actually have and what are actually being created. Now, ADP job payroll came out lower than expectations, and there was a couple of other things. And then all of a sudden, non-farm payroll comes in above expectations after they lowered them because we missed it last month. And all of a sudden, interest rates actually tick back up. That's not a good thing, because this economy, this housing market, the car industry, nobody can take on these high interest rates. And the consumer, right here, if we take a look at this, consumer outlook hits the lowest since 2011 as tariff fears mount. Conference, oh, that's just a survey. Essentially, we hit the lowest consumer outlook since 2011. And I was reading this article. I don't know where it's at now. I didn't save it. It was saying that once consumer index falls to this certain point, it has been followed by a recession every single time. Is that going to happen now? We have consumer outlook, people can't afford anything, and now the Fed, even though we have negative GDP, and the Atlanta Fed actually is projecting GDP growth to be even further down than the 0.3%, but we'll see what they kind of finalize these numbers at. But if GDP is coming down, interest rates should be getting cut. And right now, what we also have going on is this number of listings that's being entered. If you take a look right here, it continues increasing every single month. And yet, May and June, months that have an influx of inventory hitting the market, are yet to come. And if nothing changes with under contracts picking up, that inventory is going to continue growing. Now, I did about 2 weeks ago send out the first email with the inventory growth within the, so you can sign up to the link. I'm going to put it down in the description, down in the comments, and I'm going to show you an email of what it looks like. Right here, it's going to show you what's going on with the inventory growth. I'm going to compare 2024 to 2025 in the month that we're at. So the next one is going to, this one was April 1st. Next one's going to be May 1st, but it's also going to be separated into different counties. Right here, we have Salt Lake, Utah, Davis, Weber. And then right here, we have Summit, Wasatch, Morgan, the Park City area. Right here, we have Box Elder, Cache County, the Logan area. We have Washington and Iron down in the St. George area. And I'm going to show you every month on the first of the month, I'm going to compile the inventory and show you how much growth we have year over year and where inventory levels are sitting. That way you can follow that and be a much more educated home buyer in the county, in the area that you're looking to buy. So that link is going to be down below. And when you do need a realtor anywhere in Utah, remember, Dinko the Realtor has your back like no one else, giving you the data that nobody else wants to give you. Or maybe they don't even follow the data because it's not important to them. But I'm going to keep giving the data. I'm going to keep making these videos. And the other big thing to keep an eye out on, US to miss out on billions as Trump policies deter overseas tourism. Now, number of visitors sinks 11.6% in March. Now, this is talking about deportation, tariffs, and this is because the world, it's really the tariffs. The world is going on a strike against America. People from all around the world don't want to spend their money in the US since Trump is putting all these tariffs, sanctioning all these countries. Now, that is a lot of money that we're going to have to see how it trickles through the economy. If GDP growth is already negative, 2 terms in a row means we're in a recession, unless they change the terminology because they did that in the second half of 2022. And right here, consumer outlook hits the lowest since 2011. And majority of the jobs that are being created are part-time jobs. I mean, that's going to be huge. That's going to be huge for the economy. Is that going to cause more listings being entered because people are not going to be making as much money? Jobs are not going to be, maybe they're going to be laying people off. These active listings are going to continue growing. And this is why it's bad news for the sellers. If this continues, sellers are going to be in a bad spot in the second half of 2025, and buyers are going to have the upper hand. I mean, just look at all the data, look at all the articles. Comment down below. I really, really want to hear your opinion. If you think we're going to see a recession, if you think we're not. I mean, they are printing an enormous amount of money. It seems like it's just falling off trees, falling from the sky. The printer never stops. They continue adding record-breaking money to the national debt. They keep prolonging stuff, delaying student loans being resumed. Some are, some aren't. Foreclosures are being delayed for years and years, where they're just printing money. So I really want to hear what you think, if we're going to see a recession, if we're not. And don't forget that that link is down below in the description and in the comments. Make sure you sign up. That way you're able to keep an eye out on in the counties and the areas that you're interested in. That way you're a much more educated home buyer with what's going on with inventory.